Good evening, all. Ira Epstein with your SPDR ETF stock market wrap-up for Tuesday, the 30th of July, 2024. So before I go to the markets, we have a big day tomorrow ahead of us in terms of general economic news. You get the Mortgage Bankers Association at 6. The Bank of Japan's going to announce what their monetary policy is. The ADP private sector jobs number comes out at 7:15. We get the second quarter employment cost index, and that comes out at 7:30. The July Chicago PMI numbers come out at 8:45. National Association of Realtors comes out with their pending June home sales, and that's at 9 in the morning. At 9:30, we get petroleum stocks, and then in the afternoon, we get the Federal Reserve monetary policy decision at 1 o'clock, 1:30 the press conference. Whew. A big day. We had the JOLTS numbers come out today, and they showed still a very strong market in terms of employers want to hire. 8.2 million jobs still being offered, and they revised up from the last report the amount that were offered. So these are not weak numbers in terms of an economy ready for a recession. A slowdown, I can see that. We're seeing it if you look at the forward guidance on a number of companies. Procter & Gamble getting hit. You saw a number of the car companies recently getting hit. Today we saw Microsoft after the close, and they were beating on everything, but when traders or analysts looked at the CapEx amount and the return on it, they weren't happy. So they took the stock down. AMD surprised to the upside, and that carried, even though NVIDIA was down $7 today, NVIDIA's back up to the 108, 109 area in the aftermarket because AMD did better. Now, you're going to see that back and forth. There's a tug of war. I thought that you can go back in the video, if any of you get my morning subscriber videos. I've been calling for 105 area to be hit, I don't know, 2 weeks now. I got where I wanted to go. That does not mean that I'm ready to pull the trigger, but I don't think it has to go materially lower. So I think we're honing in on an important area. Tesla today down $9. Pretty wild moves going on in that, if you look at it. Amazon giving back a little bit. Netflix giving back something as well today. So, if interest rates are going to be cut, as many think the Fed will do starting in September, and I've already heard people saying every quarter there'll be more cuts. I've heard people say that they expect 3 cuts just the remainder of this year. Well, companies like Home Depot, Black & Decker, Milwaukee Tools, there's many of them out there that probably going to do very well with that. You know that you'd be looking then at the home builders doing better. You'd be looking maybe at materials picking up a little bit too. So tomorrow's an important day. Is the Fed member, obviously, Chair Powell, the key guy, going to come out dovish or well-balanced? I can't imagine that he's not a bit dovish. If he comes out hawkish, I think he scares the market. But I would expect them to say inflation is moving in the right direction, that the labor market is well-balanced. That's all that he has to say on that. 4.1% unemployment is there. Friday we're going to get the jobs report. And we got, obviously, a lot more earnings with more of the megas coming out this week. We looked up, it's not until the end of August that you get NVIDIA, so it can play around. It's going to watch how the others do. Intel came out today. They're announcing that they're cutting thousands of jobs as they get their costs now more under control. Okay. But that's to be expected. And what's happened in those mega is their PEs are coming down. Their business models haven't changed. The demand is still there. And I like seeing that the traders may not like that Microsoft spent all that money, but they're spending the money. And that's why in the aftermarket, NVIDIA gave you a bit of a pop. When I look at the utilities, why do you think they're coming up? The market's anticipating cheaper, lower interest rates. And if that's the case, the logical zone to fight a battle is this triple top that we had back here. So you're just sitting here now, maybe $1, $1.50 away from it. When you look at where the market's at, the pattern is bullish going into the reports. The market has stayed over the 18-day average since the very beginning, maybe around the 8th, 9th of July, and it is finishing up, at least at this point, trying to stay over it going into the report. When we look at the last part of it, this is why I say the first resistance coming in around 72.13. These numbers are a bit above that, I believe, but you get the point. We're coming into the resistance zone. Then we look at where momentum is, you're overbought. I'll let the market tell us what it's going to do next with that. CrowdStrike, as I told you, CrowdStrike has hired attorneys to go, not CrowdStrike, Delta's hired attorneys to go after CrowdStrike and Microsoft. And this morning I was surprised because at the beginning of the day, Microsoft was higher. And I mentioned it in my morning video. I go, isn't this strange? The market's looking at an up there when you're down pretty good in CrowdStrike. Well, CrowdStrike just kept breaking as the day went on. And as you can see, it didn't do real well. Let's put it that way. You were down for the day, nearly 10%. In uranium, I'm still not seeing anything positive here. You have a bearish embedded reading. I believe traders will continue to sell the rallies until the red line closes over 21, trying to push the market each time to a new low. Now, 2640, that was your last spike low, and you got to bounce out of it. If the market clears, let's say, the $28 area, you'd want to make sure that if you're thinking of even remotely going short, that you keep that embedded reading. If it's over 20, pass it. When I look at Rivian, well, you've got a 21 reading right now, which means you're oversold. The market's in a bear pattern, and it's latched on to the 18-day average. What I would call a good value is if the market could break back into this 14.5, 15 zone. I have my doubts that it'll do that, however. I think the battleground's right here, and we'll see. Maybe the interest rate move by whatever the Fed says or does will be a catalyst. In Freeport, the market coming down. I said I thought you were going to fight a battle at the 100-day average in green. You are. You have a bearish embedded reading. It's very difficult for copper to try to go anywhere until China does something constructive for copper. And by that, I mean they've got to do infrastructure, finish apartments, do something. They keep putting money into their, I understand, their exports of goods, but they're also lowering the prices. They're doing that in order to maintain orders, because the consumers within China, according to the reports I'm reading, they are simply not buying a lot. You know, that's interesting because I looked today at Prada's numbers. Blowout. I don't understand then why LVMH is doing so bad, and they are. Kering doing so bad, yet Prada seems to be hitting on all fronts. They've got that lower brand, was it Mule? And that is kicking itself, and that's really contributing. I think their sales more than doubled. When you take a look here, you've got Linn. You know what this is about. This is about lowering of interest rates and saying this is over. The bad news is over for builders, and you can see it's happening in XHB. Markets are embedding, so you could be surprised tomorrow, so be careful. Tomorrow's a volatile day with all this coming out, but everything is bullish on a chart until you lose these embedded readings. In the financial services, same thing. This is counting on lower rates, and the market has come alive with them. You are overbought. I think you'd have serious trouble staying over 44.24 for any length of time if you're overbought at this point, if you can get there. In XLI, this is one of those that I've still got my clients telling them it still looks good to me. I'm still hoping you can get to the 128.67 area. Why the industrial sector? Well, if you're going to drop interest rates, the one thing that's going to come alive is industry. All right. Eventually, it rolls its way into it. And what starts taking place is people feel better, they need things, and away you go from there. We're not there yet. This is anticipation. The fundamentals are not jiving with the chart action yet. In XLE, the energy, and these are the energy sector. up and away you go because those companies are making a lot of money. You do realize we're pumping a record amount of oil. So whether oil's up $3 from here or down $2 or $3, the companies behind it are doing just fine. Their profit is grinding away there. That's good. In GDX, in the gold miners, maybe you get back to the 18-day average on this news. They're not leading the way. It's gold that you got to look at more than that. In SLV, we've got a pattern that has been bearish. You made your first move well under the 100-day average. You just gapped it. Now you're reaching back to it. You can either embed or not. Tomorrow's going to be an important day for silver shares. In the copper, I'm still in the bear camp until you lose. The red line closing over 21. I think traders are still pumping away, being bearish. You could be targeting the 40.09 level to the 40.29, where the 200-day average and the lower Bollinger Band come together. If you lose the bearish reading by closing here over 21, then to me, the bear side of the market's probably done at this point. Then you would churn around. I would expect that. In TLT, I'll let you all figure out how these markets will react depending on what the Fed says. You are bullish the dollar, but overbought, bearish the euro, and it's oversold, and these are the big support points in those. So I think what is said tomorrow, how the market interprets it, going to be very important. What in this market, the Bank of England even does. And I know they're not part of the Eurozone, but it sets a tone for everything, and that's what you have to be watching on all this. I'll be writing about this and a heck of a lot more in the morning in my complete futures research. And in that research, I write reports, put in graphics for you. Sometimes I do a report primarily out of graphics because they can tell such a simple story with the marketplace. Then I write about ideas I have as to where different markets might be going, buy and sell recommendations, including entry, exit, stop points, momentum stop points, all there. Then I take a look and I give you the morning subscriber video where I cover all these markets, often daily and weekly charts, back and forth on a number of them. You can say they look side by side, explain what I'm seeing. Then you get access to a study called Window Envelopes, and I'll give you the numbers as I use them. All of this, by the way, we give you a QT mobile device, so on your mobile phone, Android or Apple, everything works. You can view the special reports as I come out with them, and how do you get it? Go to IraEpstein.com research. Now, my spider's there, my futures, I solidly recommend you take the combo. And that's because so many spiders, so many, are counting on what the futures markets do in them. That's the underlying factor that moves them. And I cover both, and I do them about 2 hours apart. I think you'll find that it works pretty cool. I'm Ira Epstein. You have yourself a good day. IraEpstein.com research. You can move your cursor. There'll be an icon. I'll see you in the morning.